This is the Bringing Business to Retail podcast, and today we are talking all about that very important part of your business, and that is pricing with Adam Lean.
Welcome to the Bringing Business to Retail podcast on SelenaKnight.com. Stay ahead of the competition by opening your doors to business experts so you can learn, grow, and be inspired. Passionate about bringing business strategies to independent retailers, please welcome your host, Selena Knight.
Hey there, and welcome to today's episode of the Bringing Business to Retail podcast. I've just gotten back in from my trip to America. I went to Seattle via a little stopover in Las Vegas for a few days, and I have to say, it was super refreshing. You know, sometimes you just need that little bit of time out away from your business to recharge, refresh, and just hang out with your family. And that is exactly what we did. We spent a few days in Las Vegas because Ed was over there for a conference. So Lana and I flew over and met him there. We were lucky enough to stay in the very decadent Palazzo Hotel and just hang out by the pool and enjoy the sun. And here's a fun fact. It was 43 degrees Celsius over in Las Vegas, but it actually didn't feel anywhere near that hot because it's in the desert and there's no humidity. I have to say, I reckon it probably felt like around 27 degrees, which for me is about the perfect temperature. And the other thing that I found really surprising was that you could actually be out in the sun for more than about 2.5 seconds without getting sunburnt. Now, if you've seen pictures of me, you know that I am very fair-skinned. And so here in Australia, I very rarely go out without sunscreen on, even in winter. And that's because when you live in a country where there is a giant hole in the ozone layer right above you, you can get burnt in summer in just a few minutes. I know it's really hard to believe, but it is very, very true. So it's very rare that you will see me outside without a hat and sunglasses and sunscreen on. And it was totally by accident that I realized that is not the case in Las Vegas. You can actually be out in the sun for a couple of minutes without getting burnt to a crisp. So for me, that was quite refreshing because normally I spend so much time just putting on the sunscreen, constantly applying sunscreen. And it was really nice to just be able to put it on once and not have to do it for another few hours. So after that little stopover in Las Vegas, we headed up to Seattle. And I didn't know what to expect from Seattle, apart from the fact that I am a huge fan of 90s grunge music. So I kind of had a preconceived idea where it was going to be very hip, very arty, lots of black buildings with graffiti. But as the plane descended into Seattle, all I could see was pine trees. And I have to say, for a moment, I actually wondered if we were landing in Canada. Not that I've even been to Canada, but in my head, Canada is full of pine trees. So apart from the little debacle where my daughter left her iPad in the back of the seat pocket, you'd think that girl is a serious frequent flyer. You'd think she would know this stuff by now. But sure enough, we get to the Airbnb. She's looking for the iPad. The iPad is nowhere to be found. On the plus side, about an hour after we flew out of Seattle to come home, there was an email waiting for us when we got home to say that they had found it. It's a little bit annoying that came on the flight home, but that's okay because we have a friend in Seattle who can grab it for us and bring it over to Australia in the next month. And just something else really quirky about Seattle was our Airbnb. It was a little bit it was a beautiful, beautiful Airbnb. It was absolutely gorgeous little house, beautiful back garden. But the very, very strange thing, and if you're listening to this for the first time, you may not know that we actually have a beach house that we rent out as an Airbnb. And so we know what it's like to be hosts. In fact, we're super hosts, so we know what people are looking for. We know personally from staying in, I would say, well over 50 Airbnbs in our travels, we kind of know what's the norm. But the really strange thing was the people who owned the house had left all of their stuff in the house while they'd gone on holidays. So clearly they rent out their property for 3 months of the year, they go overseas, but they left everything in the house. I mean, underwear, socks, shoes, jewelry, all the things were in the cupboards. And it was a very weird experience to open the cupboards and find somebody else's clothes in there. But even stranger, they didn't seem to think that that was an issue. So after we got over the hurdle of literally having their stuff everywhere we went, we were able to kick back and enjoy all the stuff that Seattle has to offer. Now, I probably haven't mentioned this before, but my husband, Ed, is a little bit of a plane buff. And so, of course, we had to go on up to the Boeing factory. Super secret. You can't take your phone in. You can't take even a purse in when you go on the tour. In fact, you can't even go to the bathroom while you're on the tour. So we did the tour of the Boeing factory, and I learned many fun facts about planes. All of this is part of compromise, right? Part of being part of a family. Sometimes you got to do the things that don't necessarily interest you. I'm sure my husband and Lana would say the same thing when I go and do my shopping, because I generally only shop a couple of times a year, and I do it in America. So I know the shops that I like, I know what I want, and in fact, this time round, I even had parcels waiting for me at the hotel when I arrived, just to streamline the process a little bit more, because as much as I love retail strategy, for the most part, I don't really like shopping, which is probably why I'm so obsessed with customer experience. Because when I find a store that just works for me, that has that customer experience, that I just latch onto them and I just shop there again and again and again. So we did all the touristy things in Seattle. We went up to the Space Needle. We did a harbor cruise. We went to the aquarium and the zoo, because Lana always has to go to the aquarium and the zoo. But I think the best part was just sitting out in this back garden with a glass of wine after dinner, a beautiful back garden that it was, and just watching the sun go down on the wrong side. Because here in Australia, in the Southern Hemisphere, the sun goes down in the west, which is behind us. But of course, in America, the west is on the west coast is in front of you. Okay, I'm probably just wigging out your brain, but trust me, it sets on the wrong side. Or the right side, but the opposite side to where it sets in the Southern Hemisphere. So just taking that time out, drinking a glass of wine, having some hard kombucha, which is another thing that we don't have here in Australia, and just chilling out. That was the best part of my holiday. But you're here on the podcast not necessarily to listen to all of my holiday banter. You're here to learn something new. And today's guest, Adam Lean, actually invited me to come onto his podcast to talk all about growing your business and the 5 pillars of retail success. We had such a great time, and we nerded out about money and pricing that I invited Adam to come on the show and talk to you guys all about how to price your products so that you're making money. And this is something that I do with my one-on-one clients all the time. In fact, it's probably in the top 3 things that we do is we look at the pricing of products. And for just about every person I work with, we end up adjusting the pricing. Sometimes it's up, sometimes it's down. But at the end of the day, if you're not making money, then something is wrong in your business. And quite often it can just stem back to not understanding how much money each product has to return for you. So breaking it all down today and making it super simple so that you can make more money is Adam Lean. And if you're loving the Bringing Business to Retail podcast, and in particular this episode, I would be eternally grateful if you could head over to iTunes or Stitcher or wherever it is that you listen to the podcast and write me a review, because the more reviews that we get, the better the algorithms, which means we can help more retailers to learn, grow, and be inspired. Okay, let's jump into today's episode. Hey there, and welcome to today's episode of the Bringing Business to Retail podcast. Today, we are talking all about how to make more money. And I've got on the show Adam Lean. He's the founder of the CFO Project. And he knows what it's like to be in your shoes because he's been there. Just like me, we know what you're going through. In 2010, Adam says he hit a really low point in his e-commerce business. And it was only after using his accounting background and diving deep into the numbers that he found the path to profitability. And don't we all want that? So today, Adam is going to share with us his 4-step process for finding profit in the numbers in your business and then actually using them to grow profit and revenue systematically. So welcome to the show, Adam.
Oh, thank you. I'm excited to be here.
I'm excited for you to be here too, because I like to help people make money. And no matter when you work with me, whether it's in a course, whether it's in our group membership site, the first thing we do is get clear on money. So the fact that you are going to come in and give us some extra tips, I am super excited about.
Well, excellent. Yeah, I'm excited to talk about that as well. 'Cause, I mean, one of the most important reasons why somebody starts a business is to make money.
To make money. And tell me a little bit about, and I have to ask you because you stuck it in the bio, what is this low point in, well, first of all, what is your was your e-commerce business, and what was this low point that literally made you change everything that you did in your business?
Yeah, so I actually graduated with an accounting degree from college in 2005, and I was like, well, I'll become an accountant. So I became an accountant at a corporate office, and within months, I was just bored to tears. So I mean, accounting, they shove you in the back, they give you a computer and they tell you to record what happened. And that's what accountants do. I love the accountants out there, but it just wasn't me. I wanted to get in, work in the business and get my hands dirty and not just simply record what happened in the past. So it was around 2005, 2006, I started my own business. And at the time I thought, well, I'll start an e-commerce store because it's something new. And I could do it while I had this day job. So I started it. And then within a couple of years, I was doing $500,000 in sales, and It was growing. Yeah. I mean, it was phenomenal. I was able to quit my day job.
What were you selling?
I was selling roller skates.
Oh, so cool.
In college, one of the ways I put myself through college was by managing a skating rink. And so I had a lot of industry experience.
Yes. And roller derby has made a very big comeback. Do you still have the roller skates?
Yeah, I actually sold that business about 6 years ago, but I used to skate all the time. Roller derby is big here in the United States as well. It has a very, unique following.
I think you were a bit before the times though. Like whoever bought that business has a lot to cash in on as a result.
Yeah. I mean, and I tell people that want to start a business, especially an internet business, it has to be something that you can't, and we'll get into this later when we talk about pricing, but it cannot be a commodity. It can't be something that you can go to Walmart or buy on Amazon.com. It has to be something that is unique. That way you can control things like pricing, which we'll get into later on.
Yeah.
But, I had to pick, yes, I had to pick something that I knew you just couldn't go to the store and buy. And it was something unique. And of course, people were searching for it, which helped. There was demand for it. So I started that. And by the way, I started in 2006, but I really technically started when I was in college. I set up, I tried 3 different times setting up websites, and I built them myself, and I failed miserably.
We've talked about this in the past. I started in 2007, and I go back into Wayback Time Machine and I look at that website and it was purple and green like everybody else's.
Yes. And I can't even remember the software I was using. These days, there's like BigCommerce, Shopify, Volusia. Yeah. Back then it was a self-hosted e-commerce platform. And it was a like pill.
Flash.
Yeah. It was something, I can't remember what it was called, but it's no longer in existence. I know that much.
Yeah.
So in 2008, 2009, sales were growing, but then a couple of things happened in 2009. And I'll remember it was around October, November, right before the Christmas, Q4, big holiday, big sales. And of course I was banking on that. A couple of things happened. One, I, uh, it almost seemed like it happened on the same day. I remember feeling so overwhelmed and so confused about what's going on with my business. I felt like I had all these balls up in the air and they were all just going to come crashing down at any moment. Like I owed, I owed tons of money to all of my suppliers because of course I had to get the
Inventory
purchases before the Q4. And I was scared to death that I wasn't going to recoup that investment in Q4. And then I had a major competitor. It wasn't even a competitor. It was a sporting goods store. We didn't even sell the same product. Not one SKU was the same, but they sent me a cease and desist letter because they felt I was encroaching on their marketing, which was absolutely not true. And that company, I'm not going to name names, but that company is out of business today. And so, but I just felt so overwhelmed. And I remember going to a friend's house that night and he could tell something was wrong. And I just put my head in my hands and I said, I just need help. I mean, it was just bad. I didn't know what was going on. And what was so more frustrating was that I was an accountant. I should have known what was going on in the business, but I couldn't focus because I had so many things to do. I had customer service issues, inventory issues, employee issues, sales issues, marketing issues, and I was failing at every single thing. And it was because I was the business.
The business, yep.
I didn't create systems, and I didn't hold people accountable and assign these systems to my team. And I did not track the numbers like a true CEO is supposed to. And so that's why fast forward a decade later, I started this CFO project because I wanted to give people like me somebody that can see through all the mess and say, all right, here's the plan.
Okay. Can I jump in there and ask you,
of course.
Why did you not, you had the experience, like to the outsider looking in, they could just say, I didn't know what I should have known, but you knew what you should have known. So what was stopping you from taking the time, and I think I know the answer, but I would love to hear yours, from taking the time to actually see how your business was tracking and to see what you could afford and to see where you should be projecting?
I mean, that's a great question. And looking back, I think it was just, I was so overwhelmed. I could not see the forest for the trees. Mm-hmm. Like I was knee deep in the business and I could not see, I mean, I couldn't see the forest for the trees. I couldn't even see a blade of grass. I mean, it was just, I just felt completely overwhelmed. And I felt this pressure of this business and the fact that, I was doing, $500,000. I can't remember at that point, maybe 750,000 in sales.
Which is a lot of money. We're talking, what, 10, 12 years ago.
Right.
If we amortize that, that's a good 7-figure business.
Yes, definitely.
Yeah.
And, I had tons of orders, but I just felt like I had all these moving pieces and I did not know which of all the moving pieces I should focus on first. I didn't know which ones were in the worst shape. I didn't know which ones I could tackle or which ones were going great. I just didn't know. And so my solution was just to work longer, longer and harder hours.
They've got a word for that now. It's called hustling.
Yeah, right.
This is an anti-hustle zone.
Yeah, I totally agree with you. Totally agree with you.
Because you didn't get any further, did you? Like working extra hours, all that did, from what you're saying, and correct me if I'm wrong, is it just added to the overwhelm because you were trying to do more and more things instead of actually stepping back and going, you know what, I can't do them all. You spent more and more hours stressing yourself out.
Totally. It's just like when people say, you shouldn't necessarily throw money at a problem. Well, you shouldn't necessarily throw more time at a problem.
Yeah.
You got to fix the underlying, you got to fix the underlying symptoms of that problem.
Yeah. And we have hear that all the time, to the point where we've actually just released a service. So we hear people saying they spend days uploading inventory to their website, which is just ridiculous. As the owner of the business, you should not be spending days uploading products. So we actually just a couple of weeks ago implemented a service where you can send us your invoices and we do it for you. We get the data from the manufacturer's website. We put the SKUs in, we put the categories in, and your inventory can be up and ready for sale before it even arrives.
Oh, I wish I knew about that 10 years ago.
Well, you were at the forefront, really, in terms of e-commerce. You were kind of at the forefront because that's when I started. And the world was a very different place. Like, we didn't have data on our phones.
Oh.
There was no such thing. I remember spending $300 on a mobile website, like a wireframe, because we could actually see that more and more people were browsing the website via mobile. And it was the ugliest thing in the world, but it converted. So, like you said, you have to go sit back sometimes and just assess, because maybe the money's coming from somewhere that you didn't even know about.
Right. What's funny is that it seemed like I started in 2006 up until probably 2010, 2011. It was almost like the big box stores, the giant brands that have been, powerhouses in the marketplace for decades. It seemed like all of a sudden, like in 2010, 2011, they awakened to the fact that e-commerce was here to stay.
Yes.
You know what I mean? Like the fact that I was able to rank so high in 2006, 2007 in Google for
no one else was doing it.
Right. Nobody else was doing it. I had no competition. And it was just crazy. And then all of a sudden it just seemed like overnight,
Yes.
people popped up.
I was speaking at a independent jewelers conference just recently, and I was doing some research. So as I said, I started my first e-commerce site in 2007. And I remember going to one of the big chains, and I couldn't find any data on any of them, but one of the big chains did say, we were the lead, we were the pioneers in e-commerce, starting our first e-commerce site in 2013. I was like, that's a good 6 years after I started.
Yeah.
So there's definitely something to be said. But back to your overwhelm, I'd love to know, what happened when you went to your friend and said, I need help? What was the outcome?
Well, okay. So that's lesson number one. He was a friend. He wanted to help. He just really couldn't provide great help other than just listening. Mm-hmm. And a lot of business owners who are overwhelmed, they'll go to their friends and their family or their spouse, and you'll get a caring, empathetic ear, but you're not going to get true help. And you need true help. It's just like if you're sick, you go to the doctor because you need true help.
Yeah.
And so I did a couple of things. One, I started meeting with a coach that was an outsider that could see my business through without the rose-colored lenses.
Totally unbiased.
Totally unbiased. She was very objective, and she just asked hard questions, and it just helped me clarify. And it clarify my thoughts, clarify what I wanted to do with the business, and it was very therapeutic. Just talking to somebody that understood and got it.
I think we forget about the therapeuticness. I don't know if that's a word, but of speaking with somebody who just understands what you're going through.
Totally. Right. And that's hard because your friends and family and spouse don't understand what you're going through. They want to care. They do care, but they can't see what you're going through. And so I met with her, and she was very helpful from a therapeutic standpoint. And then I started doing something that I did when I was an accountant. I created this spreadsheet, and actually a version of it is much, much bigger and more complex now. But I still use something like this today with my clients and my own business still. But I started tracking every day, week, and month. I tracked key numbers in the business, not just sales and profit, but key drivers of sales and key drivers of profit. For example, conversion rate, the average time spent on site, you have a return on ad spend, things like that, that were drivers, things that were actionable, things I could take action on. And so I had this spreadsheet of all this data, and it wasn't a whole lot because you shouldn't be tracking a lot of information. You should be tracking the most important things. And then I set essentially goals for each one, so that if they all met my goals, then I would hit my profit goal for the year.
Mm-hmm.
And so every day, week, and month, I would track. I would literally take out every morning. I would open the spreadsheet and key all the data in. And then, of course, I would look at it daily. But for, it's much easier to look at it on a monthly basis when you have all the pieces of information. And I could see easily what metrics were not hitting my goals. And I looked at the one that was impacting profit the most, and that's what I focused on. I zeroed in on and started improving that one thing.
And what was it?
Well, no, it depended on every month. Yeah, whichever one it is, it was. If my average order value, for instance, was not hitting my goals, but everything else was, then that was the problem for that I needed to tackle that month. And that's the thing. When people have a laundry list of problems they want to tackle in their business, well, if you have more than 5, you're not going to tackle them. If you have everything to do, if everything's important, then nothing's important. Nothing's going to get done.
And if you have that, I was going to say, if you have that many things that need to be done, it can't just be you.
Right.
You need some extra people.
That's true. And so I literally was able to start running the business by the numbers and understanding what the problems were. And the problems became very clear after that.
And I think what's really important that comes to me right now, and obviously it's occurred to you too, because this is what you've called your business, is in a big business structure, that is the job of the CEO. The CEO is not out there serving customers. The CEO is not out there doing inventory. The CEO's job is to look at the numbers and to allocate the resources or to get the information that they need to fix it. That's pretty much all they do.
Yes. And that's why big businesses have CFOs, chief financial officers, to help the CEO guide that person, the CEO, on what decisions to make and what are the most important things. And here's what the problem is with small businesses, is that their bookkeeper or their accountant will close their books, whatever that means. Most people don't know. They'll do all this magic behind the scenes, and the bookkeeper or the accountant at the end of the month will email the business owner a balance sheet and income statement and maybe a statement of cash flows, and that's it. Well, if you're the CEO of your small business, you've got to focus on being able to interpret those numbers to, just like you said, to grow your business. Well, those 3 pieces of paper, those reports are like Greek to most people. They don't make sense. So how can you run your business from the numbers when the numbers don't make sense? And so that's what a good CFO does, is comes in and makes sense of the numbers and helps you understand, of all the things going on in your business, these are the 3 things that you need to focus on. And here's what that means.
Yeah. I would love to ask you a question, and it is a bit of a personal question because I'd love to get a male viewpoint on this. And you highlighted it when you said you should be looking at the numbers every single day, but really you need to be assessing the numbers, I guess, on a monthly basis. How would you deal with it on that daily basis? And I know that this used to happen to me. We did the same thing. So at the end of the day, particularly if it had been raining because we had physical stores, the numbers were usually really bad. Sometimes they were like no sales because it was a baby store and people don't want to bring their babies out in the rain. How did you deal with the feelings, or what did you actually feel if you ever had a day like that?
When things were just off, when
really
sales
bad.
were off?
Yeah.
I mean, at first it was, okay, the honest answer is that starting off the first 5 years, it wasn't that bad for here's why. First 2 years, I didn't really know what to expect. I was just happy to get orders.
Yep.
But then I quickly realized that in the nature of retail, especially I was selling sporting goods, it's a very cyclical thing.
Yeah.
Like you could almost tell when people got their paychecks or when tax returns came back, people had extra disposable money to spend.
Yeah.
So I realized that there's an ebb and flow with retail. Some days are just going to be bad and some days are going to be good. And one order could be the difference between a bad day and good day.
And you can never judge a book by its cover when it comes to retail, because I agree with you. On some of those days, we mainly had served women, but some days a guy would just walk in and drop $1,000. Done. Bam. Done.
Yeah.
And that's all it can take sometimes.
You're absolutely right. I remember my first large order. I mean, most people bought one product, one roller skate at a time, maybe some accessories or parts. My first large order was an Eskimo school in Alaska.
Wow.
Like it was and they bought like 75 pair of roller skates, but it was an Eskimo village. Yes, but it was just mind blowing. And they actually sent me. I requested pictures, and they sent me pictures of their students on the skates.
Doesn't that just
exciting? Yeah.
Isn't that so cool? Like I think that's part of being an independent business is we literally get joy when people enjoy our products.
Yes. And just the fact that I was able, 3 months before I was an accountant sitting, in a small office, and now I was interacting with an Eskimo village, across the country, across the world.
It's mind blowing. All right. Yeah. So let's get back into money, because we want to give some really great tips on how to make some more money. So Can you tell me, and this is kind of where you and I got really excited when I came on your podcast, is can you give me some inadvertent mistakes that retail and e-commerce stores make when it comes to setting prices?
So that's a great question. And I would say the number one thing, and this doesn't have to just be with price setting, but the number one mistake is you got to shift your mind from focusing on sales to focusing on profit.
Yeah.
It doesn't matter how much you make, it matters how much you keep. Sales is the making part, keeping is the profit part. You've got to focus on profit. And so when it comes to setting prices, you've got to think very similar. It doesn't matter how much you price your product or your service or whatever you're selling on your store. It doesn't matter as much how much you price it. It matters how much you keep. So the retail price that you're selling it for is the sales part. Your gross profit is your keeping part. Mm-hmm. And gross profit is simply a term for sales minus the direct cost for that sale. So if you're selling a calculator, I have a calculator sitting on my desk for $10 and it costs you $2 to buy that calculator from the manufacturer, then your gross profit is $8. Mm-hmm. So the most important mistake, going back to your question, that people make is they focus exclusively on the price without regard to the gross profit. And honestly, that's what you could take to the bottom line, your gross profit. So you've got to focus on that number.
Yes. You were saying it's the keeping money, and I was thinking it's the keeping your business afloat money.
Absolutely. Because gross profit is what covers all the overhead. And then you want to have money left over. That's your profit.
Yes. Your net profit.
So your net profit. That's right. Which is what hopefully flows to the bank account, which allows you to stay in business. Yes.
And pays you a wage.
Yes, absolutely.
And I think a lot of people can get very hung up on becoming, a 6-figure business and a 7-figure business and an 8-figure business. But at the end of the day, I've seen $1 million businesses or $5 million businesses where the owner is still not getting paid.
Right.
So
right. And people like to brag about the fact that, I own a 7-figure business and they're not making any money at the end of the day. I actually had a potential client who was doing 1.25 in sales, 1,250,000, and they had a loss. Doesn't matter that you made 1.25 million. That's a lot of money that you're trading.
Very much so.
You're getting it, but you're giving it all back, even some. It's like you're paying to be in business. What's the point?
Yeah. So let's jump into that. Where do you see people leaking money? Like whenever you go into a business and you start looking at the numbers, what are say, the top 3 or 4 places where you just go straight to have a look because there's a pretty good chance that you can make them more money if you just fix that money leak?
Yeah, so there's 3 things. The number one is just sales. I mean, sales is not the end all, but it does help. It does cure.
Yeah.
Sales cures a lot. So sales is the problem, is one problem, but it may not be 100% of the problem. So sales. The second is your gross profit, which we just talked about. And of course, there's 2 ways to improve your gross profit. You can either increase your pricing, or you can do one or the other, or both. You can decrease your cost from your suppliers. I mean, there's so many times I've worked with businesses where they've used the same vendor, the same supplier for years. And of course, they're the supplier, and this happened to me. My suppliers every year would increase their pricing, a lot of times without even telling me, until I see the invoice. And then I didn't pass along the increase to my customers. And so my gross margin got smaller and smaller, and that was a problem.
Can I ask you why? What is the mindset behind, as independent business owners, we can't pass on those prices? Was it just the fear that you would lose the sales?
I think it was fear that I was losing the sale, because I loved a discount because I wanted to keep the customer, but that's not that was one of my problems.
Mm-hmm.
And with the internet, especially now, a customer can price shop you in less than 3 clicks.
Yeah.
They can go to your website, they can see what you're selling it for, and you can go to Amazon, you can go to Walmart, you can go to another retail store and see what they're selling it for. And this is why I tell people you should not, if you have an e-commerce business, you should not be a commodity. Meaning you should not sell something exactly like every other website in the world. And let me break that down, because even if you do sell a similar product or the same product, you've got to somehow add value so that people will buy from you versus your competitor.
Yes.
So for example, if you're driving down the road, 2 gas stations are next to each other, and one gas is say 5 cents cheaper than the other gas station, most people will stop at the cheaper gas station, even though it's 2 different brands.
Yep.
In the customer's mind, gasoline is the same. It doesn't matter what brand you're buying. It's all gasoline. You should not have that same philosophy. Your customers should not think that when they're on your site. There needs to be some value that you're providing so that you can price differently than your competitors. Because if your pricing strategy is just purely on price and trying to be the lowest, you're never going to win. You're just not.
Can I jump in and say,
here
is a way, if you're a gas station, here is a way that you would get me to stop there. If I knew that your bathrooms were clean.
Amen.
Yeah, especially as a woman. And I had this problem a lot when my daughter was younger, is I would usually, and as much as it's not in my nature to do this, I would usually stop at big chains because they kind of have a service level that they're supposed to keep their bathrooms to. Didn't always work that way. But if you've ever been on a road trip, or if you've ever needed to go to the bathroom and you walk into one of those skanky bathrooms where you literally don't want to touch anything, that could be your point of difference if you're a guest. We always have clean bathrooms.
I'm a bit of a germaphobe, and my wife and I went on a trip this past weekend. We stopped at a gas station. It was called Circle K. They had plastic, these gloves, like, plastic gloves, essentially, disposable gloves that you can put on your hand to pump your gas. And you just take it off and throw it away. I will always, if I go to a Circle K, go there, even if it's more expensive, because they have something that I value. And that's exactly what I'm talking about. You got to find out what your customers value and speak to that.
Hopefully they are biodegradable gloves. But again, this does not have to be an expensive task. It's not an expensive task to clean the bathroom to a level that, is acceptable. It's just sheer laziness that those people don't do that. Now, the gloves may be a small cost, but if you know that you can go into any of those stores, or you can go to a particular store in your town that has that thing, that can be literally the game changer. And I think that is so important, that quite often we perceive that customers only buy on price. But in fact, it's about the experience. It's like you said, it's exactly what you value and what I value. And sometimes I'm prepared to pay the extra 5 cents to go to a clean bathroom.
Yes.
You are too, but somebody else might not be. So it's not your job to put your values onto somebody else. You'll attract the right customers when your values and their values align.
Right. Exactly. You're exactly right. If you sell if you sell bicycles, for instance, then one way to differentiate yourself and to show value from like a Amazon or Walmart or a huge sporting goods store is by having great sales and service, customer service.
Yeah.
And when somebody calls you, actually having somebody that knows what they're talking about with bicycles, because you're now building trust, and that's how you're building an additional value. That same customer, even though they may be able to get the same bike at, say, Amazon for $10 cheaper, they call Amazon, they're not going to be able to answer those questions.
No.
And so you've developed something that's unique to you that you can offer, and then you can charge more. It's called value-based pricing.
Yeah. And in fact, we've had Jen Gill from Mountain Bikes Direct on the show, and that's exactly her whole team are mountain bike enthusiasts. So when you get on the phone, the person can answer your question. And if they can't, they can ask somebody else that's in the office what the answer to the question is. Okay. So when I asked you the 3 main leaky points, you said obviously sales, and then there was gross profit. So what's the next one?
And the next is in terms of leaky profits.
Yes.
And we'll talk about cash flow in a second, but in leaky profits, the third is expenses. So many business owners will spend money on things that are not giving them a return. Every time you spend money in your business, it's like an investment. Anytime you make an investment in something, like if you invest in the stock market, you want to make sure if you invest $100, you want to get that $100 back and then some.
Yeah.
Right? Well, the same concept with business. When you spend money, regardless of what it's on, if you spend money on, say, on employees or insurance or marketing or rent, whatever, you want to spend that money and make sure that money comes back and then some.
Yeah.
And so many people are running expenses or spending money without thinking this through, and they're just spending money on things that do not matter, and they're never going to get a return. And talked to a client a couple months ago who wanted to who spent a bunch of money on this office furniture. It was an e-commerce store. Who cares? Like if that's what you want, if that would make you happy, that's one thing, I guess. But that was a horrible investment, because that cash that he used to buy this super nice office furniture could have been used on something that will give a return, that will get you more money back and help improve the profit of the business.
Yeah. I was going to say, instead of profit, the profitability, because sometimes what you're spending money on might give you back time, or it might leverage somebody else's knowledge.
Which is a form of, which we'll see it. Because that's a very good point. A lot of things you cannot truly quantify. You can't really know for sure if this is going to give you a return, but at least if you're thinking about it and running different scenarios and financial modeling around that, then you can have an educated guess when you spend the money.
I think we all get sucked in, and this is one of the audits that I do when I work with a one-on-one client, is we look at all the SaaS subscriptions. So what's all the software that you're subscribing to? And some people are amazed that they're subscribing to stuff they've completely forgotten about. And sometimes when they realize they've got it, like, something like video creation software, it's like, oh, I've been wanting to create videos for ages. I'll use that thing. Or quite simply, it's like, Why am I paying $7 for that? And
Right.
sometimes
And
you
that
can
adds up.
thousands of dollars. Yeah.
Yes, it adds up really fast. Going out to eat adds up really fast. Take your team, you can easily spend $300 at lunch,
Yes. Takeaway
and
coffees.
right. I mean, yes.
All right.
So the sales, gross profit, expenses, everything has to be invested to thought of as an investment, because you want to make sure, because if it's not going to give you an investment, a return on your investment, you might as well not spend the money and keep the money in your bank account.
Very true.
Why spend the money?
Okay. So we were talking earlier about like gross profit. When it comes to choosing the amount that you're going to sell a product for, do you have a formula that you get people to use?
It's a good question. It largely depends on the type of business itself, because there's several different things you have to take into consideration: how unique your product is, what competitors are, how commoditized your product is. If you're selling something that nobody else sells, like on Etsy, for instance, then that's a bit different, because you can leverage the fact that your customers can't price shop you as easily.
Mm-hmm.
But there's many different types of pricing models out there. You could take your cost and say, I want to increase everything by 20%, or what's called keystone pricing. You just essentially double what your manufacturer's charging you, your supplier's charging you. But the best method, I think, for pricing is just what I alluded to earlier, which is value-based pricing. You have to know what makes your customers tick, which means you have to know who you're going after. You can't go after everybody.
No.
You've got to pick a lane. And then once you've picked a lane, then you got to know what makes those customers in that lane tick.
Mm-hmm.
And then build your entire store, the branding, the experience, the customer service, the product pages, the videos, the pictures, everything to speak to those things that your lane values.
Yep.
And then you can charge based on value. You could charge what you feel that your lane values your product at.
As long as it's profitable.
Of course, yes, as long as it's profitable. And I'm a big fan of making sure if at the beginning of every year, ideally November or December of before the next year, is on an Excel or just even on a notebook, writing out your goals for the year, like a budget, if you will. So write out what your sales goals are by product or major product category. Write out what your margins are for that. And then you'll have your gross profit, and then budget out what you want to spend and expenses, and then have a net profit. And then you'll see on paper, it's like you wouldn't build a house without drawing up the plans. You're essentially drawing up the plans for your business on paper. And then if the profit number is not what you want it to be, then what needs to change? And a lot of times it's the sales number that has to change. Well, how do you improve sales? Well, you can either increase prices, or you can get more people to buy, or you could reduce your cost.
Yep.
And so those three things. So based on that, that's how you know what you should be charging. Once you come up with a profit number that you're happy with, then whatever that pricing looks like is almost what you have to price at.
Having that revenue goal, I see a lot of people who say, when I ask, so what's your revenue goal? And they might go, $750,000. I'm like, cool. And then we get out the spreadsheet and it's like, but you only made $150,000 this year. You literally do not have enough stock to make $750,000.
Yeah, it has to be realistic. It definitely has to be realistic. And it can be a stretch goal, but it has to be realistic.
And I think I 100% know that you can get from 150 to 750 in a year, but you have to have a plan. You have to, like you said, you have to map this out and say, all right, I know that I'm going to need, I'm going to have to turn my stock over every 30 days. So do I need to reduce the number of products that I have, or do I need to expand the number of products that I have? What kind of marketing am I going to have to get? What sort of turnover does my lead time does my suppliers need? Because if you don't know all those answers, you can have the best of intentions to get to that goal, but someone else may let you down in the process.
Right. Yeah, exactly. And another benefit of having written all this down is that every month you could go back, and this is essentially what I was talking about earlier with my spreadsheet. You could compare if you know this month you needed to do 100,000 sales, you can, in the column next to it in Excel, type in what you actually did for that month. And if it's off, if it was below your goal, then you could figure out why. And then you could look at all the other goals that you had and compare it to the actuals and see which one was off the most.
Yes. And I think that brings in a very important point about life cycles and knowing how much money you should be making, because I quite often see this here in Australia. It tends to happen in about sort of late February, early March. So we have our big school holidays. They go from December right through to usually the last week of January. So for some businesses, they'll get back to school in that last week of January and even the first week, sometimes Valentine's Day. But once about Valentine's Day hits, the sales are finished. There's no more holidays now till Easter. And so in that February to kind of April is usually a really big slump. And I'm obviously being very general here. But when we actually go back and have a look, historically, that is a big slump time. And so a lot of people get really caught out. They forget what happens in that time and they don't plan forward. They don't go, you know what, February, March is a really slow time. That's going to be when we have our big sale, or that's when we're going to go on holidays, or what are we going to do to actually leverage this down, the bottom of the life cycle.
Yes, absolutely. And you can curb your expenses to account for that. Like if you're a seasonal business, you may not need to have a staff of full-time employees. You can maybe just have a staff of 4 full-time employees and the rest are seasonal staff or independent contractors.
Yeah, that's a really good point.
Yeah.
All right. I think you have shared, we could talk about money for a very, very long time. I think you shared some awesome tips. What's your top takeaway? If people wanted to implement something right now after listening to this episode, what would you tell them to do? Just something that's a quick win that they can go and do this afternoon.
I mean, honestly, the quick win is to truly know your numbers. Mm-hmm. And it doesn't have to be complicated. Just go for the past 24 months. Just go to your QuickBooks or whatever your bookkeeping software and just export all that data to Excel. and just look at it and just study the accounts, see your sales, see what your sales are for the 24 months, look at your gross profits, see what they are, and then just get familiar with your numbers and just start with the income statement. In QuickBooks, it's called profit and loss. It's the same thing. And just get familiar with it. And then look at all your expenses, see what you're spending money on. This will be an eye opener for a lot of people when they see 24 months worth.
When we do this in our courses, there's quite often a lot of tears, not always bad tears, quite often a lot of happy tears. People going, actually, I didn't realize I was making some really good money here.
Yes. And then if you want to get really fancy, take all your expenses, all your cost of sales and all your expenses and divide that by sales. So your insurance expense, for instance, divide that number by sales for that same month and turn it into a percentage. That way you could compare apples to apples. Because if you had if 1 year you had a $100,000 net profit and the next year you had a $70,000 net profit, on the surface, it looks like the second year did worse, but you need to be able to compare apples to apples. And the best way to do that is to look at percentages. So just take all those expenses and just turn them into percentages of sales. And you can quickly compare apples to apples. If your payroll 1 month went from 10% of sales to 40% of sales the next month, then that's a problem. You have too much payroll that month. And it's hard to notice that when you're just looking at dollar amounts.
So I think that's a super, super cool point is if this whole thing scares you, just export the data and have a look at it. However, I'm going to go back even a step further and say, there's a good chance that a lot of people listening here aren't using a bookkeeper or an accountant or even accounting software. So if you aren't even doing that, to me, that is your number one priority is using stuff. And there are free accounting softwares out there that you can use like Wave apps, but you have to start. I think taking what you just said is today should be the day that you take control of your money.
Yeah.
And even if that is just exporting the data and letting it sit for the next week and percolate.
Yes.
But you have to take the step.
People make the financials too complicated, more complicated than it needs to be. There's a lot of bells and whistles to a lot of accounting software, but at the end of the day, all you're doing is recording what happened. You made a sale, that's a record in your bookkeeping. You spent money, that's a record in your bookkeeping, and the profit and loss report is just all the totals of all your sales minus all your expenses gives you your profit. That's it.
That's it. Yeah.
Don't complicate it more than that. You could even if you don't want, I totally agree with you. You've got to have the right data. You've got to have data. You got to know your numbers, because it's like playing a basketball game without a scoreboard. How do you know who's winning, who's losing? How does the coach know what players to send in?
I feel like it's playing the basketball game without the hoop.
Yes, absolutely. Yeah, totally.
The scoreboard comes next. That's the analyzing the data, but you need the hoop to throw the ball into.
And if you're not a accounting software type person, like if you don't want to use QuickBooks or even pay for it, go to the office store and get an old, it's called a green bar ledger. They all sell them now. And it's a ledger book, and just every one page a month, and just write your daily sales and write what you spent. And then at the bottom, you would add up the sales, subtract all the expenses, and there's your profit for the month.
Yeah. Or Google Sheets or Excel. The first step is just take control.
Yes.
All right.
Yes.
Are you
adding your numbers?
You also said that you've got a little video to help people with understanding their numbers. So we're going to link to that into the show notes. But if people want to learn more about taking control of their money or working with you with Unstoppable CFO, where can they find you?
The CFOproject.com/video is that video you're talking about. So the CFOproject.com/video. And that's where you can see a video on why your business is not profitable. and I have 5 steps that you can take to get it profitable. It's a 20-minute video, very short and concise. And you can just also learn more about what we do at the CFOproject.com.
All right. Thank you so much for this, because as you can tell, I'm a little bit excited, because when we can help people make money, the more money people make, the more impact that they can have on society, whether it's giving money away, supporting charities, increasing your own lifestyle, increasing the lifestyle of your employees, whatever it is, the more money you make, the more impact you can have. So I love giving this information. Thank you so much for sharing with it, because the more we can empower people to have profitable businesses, the world is a better place.
Totally. And profit, you're absolutely right. Profit is not a dirty word, because I have a client that his business exists to give it all away to charity.
Yeah.
The more profit he makes, the more he can give it away.
I have a client that's very similar.
Yeah.
And it's the more money we make, the more people we help.
Absolutely.
Okay. Thank you so much for sharing all of this today.
Of course. I'm glad to be here. Thank you.
I hope you enjoyed this week's episode of the Bringing Business to Retail podcast. You can find all of the show notes over at selenaknight.com. If you found something that you heard today particularly useful, I'd love it if you could leave me a review on iTunes or Stitcher. And of course, feel free to share this episode with someone that you think could benefit by listening to it. Want more retail biz strategies? You can watch the Bringing Business to Retail TV show, where each week I'll answer a question or provide you with a simple, actionable retail biz strategy that you can implement in your business right away. If you have a question or a guest, I'd love to hear from you. Drop my team an email at podcast@selenaknight.com, and I'll see you on the next episode. Have a great week.